Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello, Canadian MJ friends. We're going to do a wrap up here looking at MJ, the ETF, WEED, APH, ACB, and MJN. Haven't done a video in the past couple of days, and that's because the price has been staying within the no trade zone that I outlined in the last video that I made, which means I'm not interested in the price as long as it's within that range. So we have now made some bear breaks. We had a bit of fundamental news come out, some news that the media was blowing up in terms of legalization and actual implementation being pushed back a little bit. Now people looking at August, September, potentially even November. And again, this is all just short term. This is affecting the short term charts. If you are a long-term investor, whether it's July or whether it's September, isn't really a major impact in the long-term outlook of things. So I definitely care about this because as a short-term trader, it does impact things. We had a bunch of bullish news come out. We had WEED earnings come out, but the overall market setup and the trading within that tight consolidation range really overrode all of the news, and we did see that bearish sentiment kick in here on Friday with some bear breaks. So we're going to start with the weekly charts for longer term perspective, and then we'll zoom into the daily charts, and then at the end of the video I'll do ACB and how I traded it on Friday. I made a couple trades and there was some really nice setups and just some nice examples of short-term patterns to utilize. So here on MJ, looking at the weekly time frame, we have a weekly inside bar to be watching. Next week, a break of 31.79 is bearish, and a break of 33.73 is bullish. We are closer to a bear break than a bull break. Also, of course, the correlation to the overall markets is a factor, and we saw a bearish reversal candlestick form on the S&P 500. I'm actually playing the S&P 500 short with puts and options heading into next week. So that has always been a factor, where as the S&P 500 has been running and bouncing 5 days in a row at this point, 6 days if you include Friday, that it tells me, okay, we're due for healthy SPY consolidation, and we're not seeing a huge amount of correlation in terms of the daily charts with the bulls going up in the Canadian MJ sector following the S&P 500. But if the S&P 500 begins to pull back, in my opinion, that will have some bearish impact on the sector overall. So as we look for healthy consolidation in the S&P 500, in my opinion, that's going to lead to most of these individual names breaking their no trade zone bearish and breaking support on the daily time frame. And some of these names have already done that. So closer to a bear break than a bull break of this inside bar, but we'll have to see which direction it breaks. Something to note, I tried to short MJ right at the open on Friday. Fidelity has no short shares available. That's the first time I've ever seen that on this ETF. Usually it's over 100,000 shares available, and I've been able to short it pretty easily. So first thing, got that unfortunate surprise. I cannot short this sector right now because that's telling me that there's people shorting this space and there's no more shares available to do so. So we'll have to watch to see. I'm going to be keeping an eye on that in terms of once shares become available again on Fidelity. That will tell me that some people are covering their shorts. So that's a little stat that I'm going to be keeping an eye on. But would have been a nice play with the follow-through that we saw in the week close at the low of the day. So again, looking at supports, I'm looking at a higher low here on the daily of $32. And then another one down here, $30.36. And we have a bit of a double top up here. It was a lower high, $33.93. And 33.73. So we have our low of the dump, high of the bounce, higher low, lower high. This is one long drawn out equilibrium pattern, and I'm not really too concerned with the support here. This is the major support. That's down at 30.36. We can, ideally the bulls want to hold 32, but if it breaks, it's not game over. We will still be in this equilibrium pattern if that does break. So let's just remove that line right there, and we're going to be looking for a higher low compared to 30.36 and a tightening range. And in my opinion, this daily equilibrium pattern, unless the overall market dumps or something like that, could see a tightening range form for the next couple of weeks. And we could be looking for a break in this pattern towards the end of February. Just a reminder, we don't have trading on Monday with holidays in the US and in Canada. But you can see the week close near the low of the day and likely to form a higher low on this daily chart after another day or two of downside. WEED, so the bearish reaction here. Look at the week close at the low of the week. It's an inside bar on the weekly time frame here as well. We're looking at the daily time frame. And again, the two key most important support levels on any individual name or the sector as a whole is the low of the dump and then the higher low on this bounce attempt. So again, it's the low, the high of the bounce, higher low, lower high, and now we're coming down in this tightening equilibrium pattern. Again, it's the same scenario where the bulls would ideally want to hold 26.12 here, but that's not a must hold for me. The must hold is 25.23. If we break that level, that is a bear break of this equilibrium pattern, and we will be looking back down towards the low of this dump at this point. So right now, the overall sentiment is bearish. The momentum is favoring the bears. The S&P 500 formed a bearish reversal candlestick on the daily time frame. All of these indications tell me I'm only looking to play this sector for short-term oversold bounces, and that's the play that we made on ACB on Friday. But I'm being very, very patient. Again, I didn't touch Canadian MJ for days and days while we were in this no trade zone, just patiently waiting. And because we are breaking bearish on some of these names, that's telling me, okay, the only trade on a bear break of this daily setup is hourly or 5-minute oversold bounces for quick flips. And I say for quick flips because we have to be quicker to lock in our profit when we're going against the trend. So after a bear break and stop losses flushing, it's fine to play these oversold bounces, but I'm locking in those gains short term and waiting for the daily chart to reestablish itself before I'm looking for any kind of strength or any kind of position to hold longer than, just an hour or two at the most. So close at the low of the day, 26.12, and then the key level, 25.23. Bulls really want to hold 25.23 next week. Resistance, I'm looking at 28.50 and 29.50 as the two important levels here on the daily chart. So still in an equilibrium pattern as far as I'm concerned, but favoring a bear break. APH weekly chart, close at the low of the week, inside bar, more likely to break bearish than bullish. We do have weekly bearish MACD crosses. These are lagging indicators, so I'm not going to look at this MACD and say, oh, we're heading down to lower lows. I'm going to look at the price action, and that's what's telling me that the bears are in control here. So the MACD, we could see, a couple weeks ago that the bearish cross was likely to follow through unless the bulls made a V-shaped recovery. So the daily chart for APH already broke bearish from its no trade zone. So the low of the dump, the high of the bounce, higher low, lower high. This was the no trade zone I drew, and we dumped through it here on Friday. So now the only support that we have, aside from the low of Friday, 1377, is the low of the dump, 1241. Obviously, if we break this low of the dump, that is a significant bearish development, and we'll have to find a new support level with a lack of support due to the extreme move to the upside. So on this huge breakout, we went from 631 to 2475, a 300% move in just a few months. Again, that is not sustainable. We see consolidation. The faster you run, the more significant the pullback on this consolidation. So at this point, we've pulled back 50% of the move to the upside. And I don't really use fibs in terms of fib retracements looking for price levels, but I do note how much have we pulled back percentage-wise compared to the bull breakout. So if we break down to a lower low, then we're going to be giving back more than 50% of the bull move, and we'll have to establish a new support somewhere. This overall uptrend isn't going to break on Canadian MJ unless we dump and lose the October lows, which is very, very unlikely. But those are the key levels, because if you look at this long-term pattern, anything above 631, in my opinion, will be a higher low overall, because again, we haven't established a key base of support to bounce off of on this weekly chart since this breakout happened. We saw some short-term bounce attempts, but if we drop down to a lower low, it's going to require a long time for this weekly chart to regain momentum for the bulls. It will start with daily higher lows and higher highs, and then we'll look for the weekly chart to form higher lows and higher highs. The bottom line behind this video, again, not a lot of bulls are going to want to hear this, but there's a lot of bearish sentiment in the short term. It's not game over until we break the low of the bounce in terms of, significant setback for the bulls. But everything, all momentum and all sentiment is leading to the downside right now, which is why I'm staying all cash and staying limber and bouncing in between positions very quickly. So week close here on APH, a more bear break than WEED. Again, look at the low of February 9th. That was our higher low that has broken. WEED has not broken that level yet. MJ has not broken that level yet. So those two names holding up better than APH on the daily chart at this point. ACB, close at the low of the week. Weekly inside bar, likely to break bearish next week. Daily chart, bear break of our equilibrium. We have our low, high of the bounce, higher low, lower high. This is our no trade zone and a clear bear break. But we had an 8% gap down open on Friday, and that had a really nice entry opportunity because the hourly RSI, we'll look at it all in just a moment, but the hourly RSI was crushed, the 5-minute RSI was crushed, and we had some nice oversold bounce flips. but we gave it back and closed weak. Big upper wick of profit taking. So I'm looking at support of 996, and then we have to look at psychological levels, 928, 9 psychological, and then all the way down to 711. So 8 psychological be in there as well. There's a lack of support in this area, and we have to be cautious. And again, short-term flips, if you're looking bullish, bears are looking great. This was a bearish entry opportunity. Anybody that broke the higher low of this consolidation was a clear bear entry on APH or ACB, and you can do that with shorting, or you can do that with puts if you're comfortable with options. Again, don't trade options unless you have practiced significantly. It is not the same as trading stocks. You will lose money, I promise you, if you do not put in the time and effort to learn how to trade options. It is not just as simple as buying puts when the price action is bearish, because it is such a significant difference in terms of the strike price that you're choosing, the expiration that you're choosing. These are all things you need to learn about. We have an educational video, 40 minutes long, a lot of good info there, but you need more than that information as well. That's a good starting point, but definitely don't just try trading options. And I'm speaking from experience. I just tried trading options. I lost money. I was 4 years into charting at that point and very confident. So APH, bear break, ACB, bear break. And again, 996 key support, week close, likely to see some further downside from where we stand. MJN weekly chart, inside bar, close to a bear break. So we're looking at the daily chart, and we've got our range on this dump. We are still holding strong here as well. I shouldn't say strong, but it's relatively stronger. Low of the dump, high of the bounce. No real clear high or low here. I'm looking at a couple levels. I'm looking at, let's see, we'll call it 872 and 904. We actually broke 904. So 872 is the higher low against the low of February 8th and 9th here. And it's a little bit of a different setup in terms of the day. The higher low was established one day sooner than the big three, but we're still within this range. So this would be my no trade zone right here. And we're still within that no trade zone. But again, because because APH and ACB have broken bearish, the odds of MJN, WED, and MJ breaking bearish are all favorable. But just if I had to distinguish who's stronger, who's weaker, APH and ACB are on the weaker side, and then the other three still holding up with a key support level to be watching next week. So let's look at the trade that we had on ACB to start the morning on Friday. So we started with the RSI down at 17. And that's when I looked at the RSI on Fidelity, the price it was at 17 with the open, and we were down just above $10. So that right away tells me, okay, 8% gap down open. ACB is significantly down greater than WED or APH percentage-wise on this open this morning. And the 5-minute RSI at the open, again, was rock bottom. Look at this 5-minute RSI right at the open, down at 9. It was single digits. And it was easily single digits because when we were at the low of this candlestick, it was even lower. So the open was, I was watching $10 psychological support, and it broke initially, but then I could tell there was not much more downside. So as soon as I saw the week open and the RSI levels, I said, okay, I'm looking for a gap down. Gap down's a general rule of thumb. Gap downs are for buying, gap ups are for selling. There's a lot more that goes into it than just that general rule of thumb, but that is a general rule of thumb that I always keep in my mind, and definitely have the sentiment to be looking bullish on a gap down and to be looking bearish or for profit taking on a gap up. We've seen that time and time again in this Canadian MJ sector, thanks to the market makers and their consistency. So I was looking for a gap down open and a bull flip. As soon as I saw we broke $10 and didn't see any kind of flush or stop losses dropping the price further, I went in. I did a market order buy on ACBFF, again, only using the ACB chart as my guide. And I saw a really strong bounce first thing. So I went to lock profit in on the way up. And again, that's because we bounced so significantly, so fast, and I'm not going to lose sight overall. We're in a downtrend. I'm not expecting a recovery. We just made a clear bear break on the daily chart for ACB. So this is a short-term oversold bounce. I'm locking in these gains. So I did lock in these gains in the 1040s and 1060s on the way up. And that was a day maker right there. And because I do the chart guys, I stay on the computer the majority of the day. But if I were on my own trading, I would have locked that in. That's a day maker. See you later. I'm going to go do some other stuff. So that ended up being a 6% plus bounce, a 7% bounce. And I think I captured about 4% and a really strong move. So there was another trade opportunity, and I entered again on a double bottom fishing play. So bottom fishing is when you're looking at a key support level and you look to enter just above that support level. and you put a stop loss just under that support level. And it puts the risk to reward in your favor. It's a high percentage chance of getting stopped out because the trend is favoring the bears. But if you get stopped out, the risk is very small because your entry is just above that key support level. So when the price was down at $10, I was highlighting, I was live, and I was saying, okay, we got a bottom fishing play setting up. And even though the other individual names did break to lower lows because ACB was already so extended to the downside, we were looking for a key entry. And as soon as $10 held on this pullback, and it actually broke again to $9.98, but we held support by 2 pennies, and I entered at about 10.03 or so. Again, just a market order buy. I say to myself, all right, I'm out if we break a new low of the day. I was risking about 0.5% before I would get stopped out, with a goal of 2 to 3% on a bounce. So that is a risk to reward ratio of 1 to 4 or 1 to 6. Meaning if I'm risking 0.5% and my potential reward is 2%, that is 4 times the risk. Or if it's 3%, it's 6 times the risk. So again, technical analysis, I'm not predicting. I'm not saying we're going to hold this level and bounce. I'm saying if we hold this level and bounce, I have a great risk to reward entry, and that's what I want to see on a trade setup. So just like that, we bounced and made it all the way up to 38. So it was a 4% bounce, ended up being an 8-to-1 risk to reward entry opportunity. But at that point, what my strategy was, you could have certainly locked in those gains again, anticipating another lower high in an equilibrium pattern. But my game plan was, okay, I have my profit on the day. I'm very pleased with that. That's all I need. I'm going to set my stop loss at break even, and we'll see, if the bulls can recover with any significance today. So that's what my play was here on the second half. Or I should say my second trade, and it ended up being an equilibrium pattern. So our low of the dump, high of the bounce, higher low just barely, lower high. Mine here going in the wrong spot. Higher low, lower high, and then we were within this range before a clear bear break at 130, and this is where I exited the position. No loss on the second position. Could have locked in a couple % of profit, but again, that was just a scenario. Had I not already made money that day, earlier, I probably would have locked it in for some profit. And also another thing that I want to point out is what my trading style is, as I am playing with some bigger positions than I'm normally used to, a couple months ago. Thanks to cryptocurrency, I've been moving profits from cryptocurrency to trading Canadian MJ. But the style that I do is I enter a full position and then I take half of that profit soon, early on into the trade, maybe 3 to 5 minutes into the trade if it's a nice solid bounce. And what that does, it gives me a ton of wiggle room. So if I enter at, let's just say for ease of math, if I enter at $10 and I have a full position and I exit half at 10.40, what that instantly does is lowers my cost basis because I just locked in profit, and the second half of my position instantly moves down in my eyes. This is how I interpret things or perceive things. So as soon as I sell half at 10.40, my break even is now 9.60 because I entered at $10. And if it drops down to 9.60 and I exit the second half of my position, I'm break even on this trade. So it gives me so much more wiggle room where if I exit half of my position after the 4% move, 40 cents to the upside, and I put my second stop loss, or I put my second position, the second half at break even, I know no matter what, I'm profiting on this trade. And then I let it ride a little bit longer, and then I lock in the second half because we bounced so significantly. So I've been doing this in the cryptocurrency space. I've been doing it trading the S&P 500, where I will enter a large position and lock it in, half of it, within 5 minutes of the first trade to give me a lot of breathing room. Because normally that would be too much of a risk in terms of a full position and, wanting to ensure that I'm not going to lose on the trade. It's a lot harder to exit a full position at the same time. So all different kinds of factors that have me doing that, but just wanted to share that that's my trading style with what I've been doing in the short term on these quick trades. So where we stand heading into next week, I have a bearish lean. I'm very cautious in this space because we do have individual names breaking their levels. The hourly RSI on some of these names, ACB and APH, it's going to be lower. It's oversold on ACB and APH, and it's not on WEED because we haven't had that clear bear break yet. So on bear breaks, I will be looking for APH and ACB for oversold bounces, but that's the mindset that I'm in until I see. Now it's going to be a long time before APH and ACB change their daily chart back for the bulls. We need higher lows and higher highs on the daily, and that's going to take about 4 to 5 days to play out at the least. So I am very cautious playing anything bullish, and I'm only in a bullish oversold quick flip mindset until the market proves something to me. So I appreciate you watching. That's just all my game plans. Hopefully it was helpful and insightful. I hope you have a great rest of your long weekend, and we'll see you next week.